Hello traders, this is Rich Derrick from Tradesight. This is a look at the market preview for the coming session, which is going to be for Thursday, May 16th, 2013. We had another up session today on fairly lackadaisical volume for the most part. Uh, Everything was up, the big three were up. We had, again, an underperformance by the NASDAQ side, where we had better strength in the broad market. A couple of features here. The advanced declines were very, very skinny and starting to look a little ragged and tired. We're only plus about 300 issues on both sides, and we finally recorded a very, very low intraday trend reading, which is going to affect our 10-day trend, which is something that we'll be looking at a little bit later. So let's take a look at the major charts and then take a look at the market internals. All right, so here's a look at the ES futures. You can see that we're 9 bars up now in the seeker count. We just started the new countdown now that we completed 9 bars up. We didn't get the reaction off of 9 bars up just yet, but we did get up and touch that plus 1/8 level at 1656. So we're into the overbought territory in the Gann box. We're definitely extended pretty decently above the 50 and the 200 DMA, and definitely more so than we've seen so this year so far. The numbers to watch overhead are going to be 1687.50, which is plus 2/8 and a very important Murray Math level. To the downside is certainly going to be the 8/8 level at 1625, which was very well traded earlier in the week and last week, and also the that number is also the rising 10 EMA. So those are all things to keep on top of. Also notice the extension here in the MACD, which is certainly very, very positive, but has had a very good move and a strong drive above that most recent crossover. Here's a look at the NQ futures. The NQs again got up and touched that plus 1/8 level. For the NQs, it's 3007. We had touched that level and pulled back off the high by a fair amount here. And now the overhead levels to watch on the NQs are going to be the 3046 level at plus 2/8. To the downside, 2968 3/4 is going to be near-term support, which is a very strong and prominent 8/8 level on the Murray Math box. Now, as far as the internal measurements go, the SOX was relatively strong versus the NDX today, but it didn't make a new high on this move. Really, just getting back up to this previous high. The real bogey to take out is going to be this prior breakdown level, which we've still been unable to overcome. And here's a look at the Dow Gold ratio. This is the Dow divided by gold. We can see that as of today's close, we did make a breakout on a new high above this. This extreme move here was when gold was collapsing, but we since kind of retraced, kind of pulled back here a little bit and recharged, and just today broke out to a new high with new players putting on risk in the near term here. So shunning gold in favor of equity exposure in the overall market. Here's a look at the total put call ratio. The ratio bounced back up today more towards a neutral area. Still haven't yet recorded that super climactic 0.5 reading where we can really expect a very sharp reversal in equities to the downside. Haven't seen it yet, but we're on guard waiting for that. Okay, now here's a look at the 10-day trend. That's the upper chart here. We're getting very, very close to the overbought threshold. We had that 0.6 reading today in the daily trend. So if you put that into the 10-day average, that's really starting to affect the overall average here. The average is 0.87 today, which is just above the 0.85 threshold of being overbought in the market. If I can turn your attention here to the left part of the chart, you can see that we got to the reversal threshold here at 0.85 and actually penetrated it. If you look at the lower chart here, the lower chart is the the SPX cash, the Standard & Poor's cash. And you can see that after we recorded that, the next impulse was certainly to the downside and not to the upside. We had another touch and a break of the level, not quite as extreme here, and that was coincident here with this top. Didn't necessarily reverse to the downside here, but it did arrest this very well organized advance to the upside, and you can see how we went sideways here for more than a week after getting exhausted. We had this other touch back here at this point here on the S&P, and you can see that it also arrested the advance and actually started some corrective activity in here again. Here's another breach. This one was a little bit sharper and a little bit lower to the downside, and you can see that was as a result of this move to the upside, and then the next move in the S&P, instead of being up, was definitely sharply to the downside here, even though the move to the downside was short-lived. But the 10-day trend definitely did predict that. The other break of the level was here after this very, very strong advance. This break here didn't reverse the chart, but essentially just put a top on it for a couple of weeks here and stop the advance for at least a couple of weeks, where the market had to recharge itself after recording that overbought reading from the 10-day trend. So we're not quite there. We're very, very close. So just be ready for this, and when this does register, as I hope it does, just to change things up a little bit here, then we're going to have to look at selling rallies instead of buying pullbacks. All right, now as far as the individual sector performance, the XAU was definitely weak again today. You can see it's actually rolling down here to retest the prior low. Keep in mind the XAU, this prior low, is right around the 0 ace level on the Murray Math box, so that's going to have considerable support there on a retest, and probably not just yield right away. The other thing to note here today was the underperformance in the BTK. So the biotech started to see some negative action after this extended advance. The semiconductors and the financials, performed fairly decently. So let's drill down and take a look at those individual charts. All right, starting from best to worst today. Here's a look at the BKX, which is the financials. Very strong day, expanded the range to the upside, made a new intraday high and new closing high on the move. But note that we're now 9 days up, and not only are we 9 days up in the seeker count, which portends at least a pause or a potential reversal, we are also into the next Murray Math level here at 7 ace. The 8 ace level, which is just overhead, is a much stronger level than the 8 ace level, than the 7 ace level. So if we get up into this 8 ace level at 62.50, that's going to be fairly extended here if we just continue straight up there, and definitely going to be notable and induce some profit taking, at least in the short term. The semiconductors, the SOX index, was also fairly strong on the day. It pivoted up and made a new high and a new high close on the day. Overhead 468.75 is an intermediate level. We're now 6 days up in the countdown phase, so we've got another 7 days before we get to an exhaustion, but definitely something to be aware of. To the downside, look for support here. Probably right at this pivot area. We had these two inside days. These two inside days were resolved to the upside today, and we talked about in yesterday's preview that when we resolve this, it should be powerful, since we had an inside day to kind of wind up some extra energy right here. So if we do return to the downside, the low of that 2-day pattern at 460.5 is going to be important support. Next support is going to come in at 458, which is the rising 10 EMA. OSX was kind of nowhere today. What we've also been doing is kind of slugging sideways here in this little consolidation pattern. Haven't really been able to make good on this breakout over the February highs. Today we did use the 10 EMA as support, and if we do lose that will turn the chart to short-term negative. But for now, we still remain positive in all time frames, as we're above the 10 EMA, the 50, and also the 200. BTK was fairly weak today. Wasn't a classic reversal candle. It did make a new high on the move. It did take out the prior day's low, but didn't settle below it. So it's not a key reversal day, but it is definitely something that you want to be aware of. The plus 1 ace level at 2062.5 is going to be important, because that's the overbought reading on the GAN box. 2125 is the next level to the upside that has major interest, and down below this 2000 level is going to be very key, because that's the 8 ace level and a very strong area. XAU was last lagger, as we talked about earlier. This 0 ace level at 100 is going to be key support here. I expect them to probably start, game it to a certain extent here, being back down into this key area. The other thing that I wanted to talk about today is the Japanese yen. We don't talk about the currencies a whole lot, but what I wanted to talk about was we just completed 9 bars up here on this chart. So now we have a 9 bars up. We're right up into that area of plus 2 ace on this chart. I think this is really, the devaluing of the yen and this in this yen trade has really fueled, I think, a lot of what's been going on here, both domestically and abroad, just to kind of keep things going. If this starts to turn, I think that the equities will feel the effect of that probably very sharply, and probably will induce some global profit taking in equities. So we're up here in a key area. We're at plus 2 which is very, very strong resistance. We're 9 bars up in the secret count. So this is a very key area to watch. We haven't talked about this before, but we're just into that key area now. So if this starts to roll to the other way on the chart, where we start seeing some strength in the yen rather than weakness, we're probably going to see some global profit taking in equities. As always, thanks for listening. This has been Rich Derrick for Tradesight.